Hey guys, Jonathan Rose, owner, Masters in Trading. Yesterday, sent this email out. Oil trades higher. I have 3 reasons of why oil is going to trade higher. Let me walk you through the exact email we sent last night. In the energy edge above this chart, we use something called energy edge. All we're doing is plotting the energy contract. So we have oil is going to be this light green, natural gas, RBOB gasoline, and then we have heating oil down here. The outright markets within the energy space endured a large dislocation right here that can be seen as early as the beginning of March 2020. Notice how the markets plotted in the energy edge tool were moving in tandem, and then they just broke down. The role of the trader is to keep markets efficient. So when there's a strong correlation and then there's a breakdown, probably going to find some opportunity there. Let's scroll down. Rather than traditional technical analysis, we want to follow the money. We chart everything in dollar of a contract. So if you want to get long the blue line and it gets to the white line, you're going to make $4,800. If you want to get short the blue line and it goes to the zero line, you'll make $5,000. So in front, 3 different spreads in this chart. We have heating oil against RBOB gasoline, that's the light blue. We have heating oil against oil, that's going to be the dark blue. And then in the dark purple, we have heating oil, gasoline, natural gas, all against oil. Here's what I want you to see, and I highlighted it. Notice how the purple line just ping-pongs back and forth against the blue line, against the dark blue and against the light blue. Well, we just traded up to the light blue, which is heating oil against RBOB. We expect this to sell off. How is that useful? Who cares? I'm glad you asked, because last night we sent this chart. Purple line, same purple line as the previous chart, and now we're looking at just outright oil. And if we go back to when the disconnection started to happen, look at the inverse relationship between that purple line and the yellow line, which is just straight oil. I sent this last night. We expect oil to rally, 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 especially if this starts turning down. So now let's talk about what's actionable. Now again, the purple line is just oil relative to the other energy contracts. Okay? Right now, oil is expensive relative to the other energy contracts, and down here it's inexpensive relative to the other energy contracts. You'll notice the inverse relationship when we compare oil against the strip of the other energy products versus oil all by itself. This is the reason we are uber bullish oil. We shared this yesterday. This morning with oil down, you're going to get better levels than we had yesterday. We love this trade. We are giving a 5-star, highest rated confidence level. Get long or consider getting long oil. You can do this with oil futures. You can do this with major oil companies. Lots of ways to get long oil. Use relative value. Really powerful chart. That's what we got. Jonathan Rose, owner, Masters in Trading.